Back to Australia, and right at the bottom of Australia, I might add, in Tasmania, where I'm showing you my EuroCAD monthly chart. The reason I'm doing that is to give you a reasonable picture of what is exactly going on here. And I think the clues are, if you like, Brexit area through here. Tried to break through that high, can't do it, and eventually has fallen. No surprise there, given the currency that it is trading against. It has pretty good, to my mind anyway, fundamental numbers around it, and certainly the oil price is giving that a bit of a piggyback as well. So this chart looks to me like phase one, consolidate, phase two. What happens next is interesting, of course, but I think, as I said last week, I think it was last week or the week before, any rally on this, to my mind, is a sell. In particular, of course, if you come to a resistance level. It is on my charts of interest this week because it is a game changer bar, or what I call a game changer bar. And we've had quite a few of those of recent times. What they are is pointers in the direction that we suspect, or I suspect, the market is going to move next, and that is one such thing. To trade at the bottom of that bar on a daily chart doesn't make that much sense to me, but a pullback and anything that gives me, as I said before, a resistance area, then I would look to trade that short, that EuroCAD. Also on the list of game changer bars is Euro US dollar. I don't think there's anybody that's presented today that's in favor of the euro versus the dollar, and I can certainly understand why that would be the case. The problem, of course, is that you're entering at a support level if you were to enter below that bar, and I'm not a fan of that. That's the daily bar, but the weekly bar is, to my mind, quite emphatic, and it has rejected not only the resistance trend line, hasn't quite made it to what is pretty much a cloud of a price anyway, in this 117.30 as I've got it there as my resistance level. But the confluence here of last month, I can speak that way now because by the time the market opens tomorrow, it will be last month. That monthly pivot has been unable to be cracked, if you like, to the high side. There's a confluence of that trend line and the monthly pivot. It's also broken, to my mind, again, the, I guess, most recent support level. When I'm talking about recent, I'm going back 1 year pretty much, and it's retested that level as well. So I've got no reason to suspect this will go anywhere but short. And for that reason, I am a massive bear and looking for entries. As I said before, if you traded that daily bar, I think it's a little bit dangerous. There will be pullback, but if you've got your stops up here, I think you'd be relatively safe. I will probably be waiting for a better entry than is there. And if it comes back into, say, this area here, I think I'd be really, really interested in getting into euro dollar short. Pound US dollar is in very much the same vein, in my humble opinion. It's also giving me a game changer bar. It's very, very difficult to see there with the pivots. But if you look at the descending channel that we've adopted here, or I've adopted here, and we've had a rejection bar off the top of that range. We've had a second rejection bar off the top of that range, and that looks extremely bearish to me. I think that's a potential trade. If you want to trade that on the weekly chart, monthly pivot won't be there tomorrow. It will probably be, if I draw a line through what's happened during the month, in this vicinity, I would expect. So that's going to make it tough to trade into. But again, a break and a retest of that, or indeed get back up here, a lower high based on this double top here, I think is interesting as well. That may well be a case to consider going into the week. Pound US dollar. I think you're getting the picture that most of us are pretty bullish the US dollar at the moment. Don't like saying that, but it really does look I won't say a fait accompli, but it's pretty much there. The next one I'm going to show you, the next three I'm going to show you are far more interesting than the last three. And the reason for that is that they're setting up what I really do like to see, I've shown you three what I call game changer bars. They're actually key reversal bars. And when they're coupled with an inside bar, they are very, very powerful. I don't really like this one, to be honest. And the reason for that is the body of the bar is far, far greater than I would like to see an inside bar. Indeed, the entire range of the bar is much, much more than I would like to see. I'd much rather see a tiny little bar in here. That would convince me that price is ready to go short. That said, we are, if you like my little range there, I call an ascending channel a range. We're really looking at a potential false break of the high of that. And that it does attract my interest, but the candle itself does not. So I'm kind of going down to the smaller time frames. We've got a clear double top here, got a little bounce off the weekly pivot of last week. So I think a lower high in here does get me interested in this one. Aussie Swiss short. Now, I know we're all bullish the Aussie, but against this particular currency, which has shown strength, technically, if I see a lower high here, I think I'm going to have to trade it down to here. Any time frame, 4 hours and above would do. Aussie yen not dissimilar, probably a little bit short of being good, if you understand what I'm saying. The reason I say that is I think this channel is pointing us towards this confluence area here around about the 87.56 mark. It's a cloud of a price, of course, but there is a confluence here at the top of that channel, and I expect that price will get to that level. The problem I've got is, well, it's not really a problem. It's a signal to me that price will retrace before it goes there, because it's got ample opportunity, in my humble, to bounce off that level and maybe even continue to range in here before it goes there. So I'm of the opinion that for whatever reason, there may be some Aussie weakness. And guess what? We've got an interest rate or an RBA statement coming up on Tuesday that may well be the reason that the Aussie comes off a little bit before it goes to that level. I'll be waiting for that to happen, frankly. And if I see an opportunity to trade it, maybe short before I go long, would be the way I'd want to go. Kiwi Swissy is the last of them, and very, very similar to the last two I showed you. We've got a game changer bar, what I call a game changer bar, followed by an inside bar there on the weekly chart. That always gets me interested. We are at a resistance level. The worst part about this is that we've got to close above the trend line on the second of these high test bars. Don't think that would really give me reason to be concerned unless we get, I'll go back to that chart, sorry, unless we get a close above the horizontal level, which is, as I said, a little bit of a cloud of a price. It may well be the 66 mark, but it's somewhere between 65 and 66, there's no question. It does look like a little bit of a failure at that level. And I'm watching it closely, but I can't trade it just yet. I will wait till I see a breakdown of resistance. What that means to me is try a break of that trend line, maybe try a break of the horizontal line, and then get back under it, retest it. Then I can look to trade it short. So a few opportunities there, I think, from my point of view, and maybe you can trade a few of them, as I said, first up. But in the meantime, you probably need to wait just a little bit until those retracements take place, or you hit those resistance levels. A couple there, though, I think you can probably trade on Monday morning if there's no big gaps in the market.